Mark Connolly and Rick Ray are registered representatives and financial advisors with Park Avenue Securities, a registered broker deal and investment advisor. The information you will hear on this show is for information purposes only, and individual situations vary. The information should be relied upon only when coordinated with individual professional advice.
Do you think there are forces out there that are keeping you from achieving your financial goals? Deep in your heart, do you believe the game may be rigged against you? If you do, you need to listen to Big Money, Big Daddy with Mark Connolly and Rick Ray. They'll teach you how to avoid Big Daddy's wealth-destroying tactics. The Big Money, Big Daddy show starts right now.
And you're listening to the Big Money, Big Daddy show. You got Dale Pieper and myself, Mark Conley, today. We are happy to have you this Saturday afternoon. It has been a crazy week with all the flooding, but we've gone ahead and we've got our work done. We had a great coaching session on Thursday night, and we've got a show for you because a lot came from that, and we think it's going to be very powerful to get into kind of some of the things that we're hearing out there. I mean, you know, we've got the elections going on, and we're waiting to see who's going to be running for president. And we found it interesting when these candidates will kind of go into the financial world and want to start putting their predictions as to what's going to happen in the financial market. So I'm sure that you've heard that Trump had a prediction of a very massive recession. He was talking about the problems that we've got with the trade deals. He was talking about the stock market's not a good place to invest right now. He was talking about how the real unemployment is considerably more. And Dale and I have been paying attention to everything going on, and that's our job, is we want to relay important and valuable information to our clients, to our listeners, and make sure that you are well informed. So I thought that this would be a good topic for us to tackle and to really dive into and look at. And I thought it really pertained, this is definitely not a political show that we're doing here, but I thought it matters because we see a lot of these types of predictions. And we see them normally from not politicians, but from financial people. I mean, Harry Dent, Peter Schiff is, always making predictions that the world's coming to an end and you need to buy gold, and you need to buy gold through him because he's happy to take your dollars for the gold. And Harry Dent, he's had a series of predictive mutual funds that have failed. He's had, a history of a lot of predictions that didn't come true, but he did get that one. I mean, you get one, man, you can ride that apparently for the rest of your life. I'm convinced of that. But so what about Trump? What about the comments that he has? Is this for real? And so what I like our listeners to kind of think of is you've got to really start understanding the media, and you have to understand where their intentions come from. I mean, one of the things that, every time I sit down with a client, we talk about the overall mission that we have. We want to empower our clients so that they can understand what to do, when to do it, why to do it when it comes to their financial plan. And we feel like if we empower them to understand that, they will have economic confidence and the right financial balance and peace of mind at the end of the day. And so we're clear about it, and maybe our intention in that one particular meeting is to go over their portfolio, make sure they understand it, and talk about risk. Well, think of what the media's intention is, and always kind of go and figure out what they're trying to accomplish. So let me ask you this. Let's put it this way. If, I don't know, let's pick on one of the media. We'll do Fox Business. Why not? All right. So Fox Business has a story coming up. What do they really want to achieve? If you think about the media, their goal and their purpose is to get the most people to watch their show as compared to the competition, whatever, MSNBC or whatever it is. So they just want viewers. And why do they want viewers? Well, because if you have viewers, you can charge more for advertisers to run commercials on your shows. And why does it matter if you can charge more? Because you make more money, okay? It's about, for the media, they want to make more money. They don't actually care if investors do well, and it doesn't matter. So think about this. If in this example, I was just saying Fox Business, they all do it. But, if they say, up next, Dale Pieper is going to be talking about how to build a balanced portfolio that will prudently over time deliver returns and how to properly allocate to do so within a risk level that is comfortable for a client. Nobody's staying tuned to those commercials, right? You're clicking to the next channel. But if they say, up next, we're going to have Mr. Daddy Warbucks is going to tell you why the economy is crashing, the dollar's crashing, oil's crashing, and the only way that you can stay alive and eat and make any money whatsoever is stay tuned. That's up next. Well, you're going to be interested in what that might possibly be. And that's how you grab viewers. So what's right, though? What matters to you as a listener? What should you be paying attention to? And I think it's just the day and age that we're in now. There's so many stations, not just on TV, but then now you've got internet stations. They're all fighting for your dollars, for your eyes, for your interest, and they will pretty much say or do anything at this point in time. I'm convinced it's not just news. And so they put on these people that make these crazy predictions that they're right. Like, I don't have a statistical analysis of it, but it's barely ever right. But if you get one right, if you keep making predictions and you say the market's going to crash every year, well, there are some years it does crash. So, they're eventually going to be right. Let's face it. So, my take is that's how this operates. And there's always some money interest behind it. Well, kind of bringing all that back to Trump and his comments, I'm not here to debate factual information. Everybody brings facts, but then as soon as you add the hype to it to try to instigate emotional reaction to get something from someone, okay, that's where the problem comes in. And hey, I'm not blaming them for doing it. Look, it's capitalism, it's trying to make money, and that works. Fine, but we're here to be a more balanced approach. We're here to be a better sounding board for how to be prudent within your financial plan. So Trump, even though he brings these facts, and we're not here to debate the facts on this show, it's not what this is about, but where does it go? Then he proceeds to say, the stock market's going to crash, things are going to be bad, unless you vote for him and he's president and he says he'll fix it. Okay, so the hype is to get votes. Hey, that's what politicians do. I'm not knocking it. I'm just saying.
He's not a politician.
Well.
Couldn't help myself.
Hey, I guess you're right. So it's just understand where that comes from and relax. Number one, you shouldn't have all of your money in the stock market anyways. You should have a financial plan where you figured out everything you need to do to be organized. You have put together some of your money that's safe, secure, and more ironclad as anything can be. Everything has some degree of risk, of course. And then you should have some of your money that is in the market and an appropriate amount for a risk level you're comfortable with. So number one, that's how you should do it. Otherwise, you're saying there's some kind of way to predict when to get in the market and be in it when it's up and when to get out of it so you can be out of it when it's down. That doesn't exist. You will be looking forever. We have searched. It doesn't exist. We've seen too many clients. We've seen retirements destroyed because of market timing. We've seen retirements destroyed because of the hidden evils in tactical asset allocation, where we've done an analysis and we know which areas are going to do better than others, so we'll overweight these and underweight these. Folks, that's a form of market timing. It's destructive. The Dalbar study shows that most people are getting less than a 4% rate of return, and the market's doing 9 or 10%, depending on the time frame you look at. That's terrible. That's pathetic. Why do we keep doing it? It's time to start doing something the right way. It's time to quit listening to media hype when it comes to our investment portfolio. Okay? That's not a knock on the fact that media does what they do because they're trying to make money. It's not a knock that Trump says what he says because he's trying to get votes. And it's not saying that there aren't facts behind, even what some of these people say. All I'm saying is you can't predict the market. With no amount of facts has anyone ever been able to show the ability to predict the market. And let's just say it did crash. Fine. So be it. When I look since 1928, there's been 87 market drops that have been 10% or more, compared to there's been 23 market drops that have actually been 20% or more. Get this fact. Since 1946, it's taken an average of just 111 days for the market to rise back to its pre-correction levels. Let that sink in. It's taken the market just 111 days on average to rise to those pre-correction levels. It's not that long.
Just look at what's going on right now. I mean, everybody was kind of worried at the beginning of the year with the market being down 5-6%. And I mean, we've already recovered all that back.
Yeah, I mean, at one point, I think it was 11% down. I got to check that. But I think it was 11% down, and all that's come back fast. I mean, even if you get out, when do you get back in? And that's the problem. Just have the right amount in the market so you can quit worrying about it. I mean, that doesn't even, what about just the stress it creates? If you're constantly moving in and moving out and moving in, trying to guess right, and working with your advisor, doing it on your own, that's just a nightmare. When all you had to do was say, you know what, I'm comfortable with a risk level where my portfolio might drop, whatever it is for you is 10%. And then just put an appropriate amount in the market that gives you the potential for long-term growth. Because at the end of the day, if that average market correction has just been 111 days, wow, that's just not that long. And even if it took 2 years, wow, that's just not that long when we're talking about a portfolio that's designed to be invested for the rest of your life. Even if you're 65 today, I think a joint life expectancy for you and your spouse is something like 27 more years. So even if it took 2 years or 3 years, and so far since I've last checked, there hasn't been a time that the market corrected that it didn't come back. You know what that means? That means capitalism works. That means companies will do everything in their power to create new ideas, create new products, create new services, and that they'll come out of whatever we're faced with. It doesn't mean there's not, time frames that are scary. It doesn't mean markets don't correct. It just means if you have the right amount in there in the first place and you show patience, the Dalbar study also shows that the average person stays in a mutual fund for about 3 years and then they move because they don't wait long enough for the proper investment strategies to develop. Or they're not happy with the performance, which many times I understand because they've got it in some mutual fund where there's some money manager that's buying and selling, the average turnover of 60%. That means, if you had 1,000 stocks in the fund, on January 1st, they've sold 600 of them by December 31st. There's no buy and hold with that. And most people don't have any clue that that's happening inside of their portfolios. And, I just think that's a problem. If I took a typical growth type of portfolio, let's look at what happened last time. Let's say Trump's right and the market crashes because he doesn't become president or whatever. Okay. You look at 70% in stocks, 30% in bonds, and we're just looking at the bond index, S&P 500. It was and this was from March of 2009 after the crash. 1 year from that point, the actual annualized rate of return was almost 55%. 3 years, it was 22% average per year, annualized average. And 5 years from that point, it was 20%. When nobody at that point in time, in March of 2009, was giving facts saying their prediction was to put money in the market. It can't be known. It's not known. So all I'm saying is start to recognize hype for hype, even if there's some facts behind it. Once it goes to the hype level and there's something being sold, that's where the problems come in. Facts are important. In fact, we're going to get into facts. I would say science is important. And we're going to get into science. And in the next segment, stay tuned, because really what I wanted to cover here is you've got to understand that there's a hype. Avoid the hype. Build the portfolio properly. Build it with math and science, with evidence-based investing. And that, my friends, is how you are going to be successful as we move forward. And we're going to cover that in the next segment. We do have a coaching session that's coming up here in June, and we're going to be doing it at Perry's Steakhouse. And we're going to dive into information like we're covering today, the math and the science of investing, the things you should be doing if you want to get extra, or what we call premium return, as well as the things you should not be doing. And guess what? You probably are. So you need to figure this stuff out. You need to know it. That's going to be in June. If you're interested in attending that, we don't have the date finalized, but we'll send it out to you if you just text the word daddy, as in Big Money, Big Daddy, to 72727. That is 72727. And we'll make sure you're invited to all our monthly live upcoming coaching events. Text daddy to 72727.
Big Money, Big Daddy.